Hey, this is Matt from InvestiQuant. Today is Tuesday, February 8, 2022. Yesterday was a quieter day relative to what we've been seeing here recently. We actually had an inside day. There's about 50 points of range in the S&P, but we've been consolidating for a few days. Volatility has been dropping a little bit after this recent lift off the lows from a couple weeks ago. And what we're going to be looking at this morning is that kind of dropping volatility level where we're still in a bull market environment combined with an opening location that could potentially be in play this morning. So let me go ahead and get this set up. Grab all four instruments. The setup will be based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, right now, we're trading right around yesterday's low of day. So I'm going to use that as part of the test here. I'm going to use the opening area, open below prior day low. We won't know until the market actually opens if this is true or not, but we are currently trading right there in that vicinity. So I'm going to use that for the current test that we're looking at here. And then I'm going to go to the indicators library. And I'm going to grab a couple different indicators from the moving averages. We closed above a 10 and above a 200-day simple moving average. And then I'm also going to use one of these VIX moving averages. And what this is doing is it is comparing shorter term moving averages versus longer term moving averages of the VIX. So for this one, the 5-day moving average of the VIX is below the 25-day moving average of the VIX. So that would mean shorter term volatility is dropping relative to some of the little bit longer term volatility levels in the VIX. So I've selected that. Now I can click view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when opening below the prior day low of day in a market environment where the 5-day moving average of the VIX is below the 25-day moving average of the VIX, and you closed above the 10 and 200-day simple moving average. Historically, we've got 193 samples here in the S&P. We've got 155 in the NASDAQ, 209 in the Dow, 116 in the Russell. So lots of sample sizes here to look at. If we look at the win rates on them, S&P, pretty nice win rate for 193 samples there. 65% of these have closed above the open. We've got 60% in the NASDAQ, 61 in the Dow, 58 in the Russell. If we look at the average moves, the average losses are larger than the average wins in the S&P. That is also the case in the NASDAQ. For the Dow, the average loss larger than the average win, and then the Russell is the only one where the average win is larger than the average loss. So historically speaking, there has been a higher likelihood of closing above the opening print in this scenario, but the moves to the downside are bigger on average than the moves to the upside. So hopefully you found that helpful. Good luck today. We'll see you next time.